Hello and welcome to video channel of Kautilya IBS Mumbai. Today we will learn about some important concepts in the debt market. Now let us discuss about the price yield relationship in the debt market. The relationship between a bond's price and its yield is inversely proportional. This means as the price of a bond goes up, the yield goes down and vice versa. Why the inverse relationship? The total return from a bond comes from two sources: the coupon payments you receive throughout the life of the bond, the capital gain or loss you experience when you sell the bond depending on the price you paid compared to the face value. The coupon rate is fixed for a particular bond, so the only way the total return can change is if the price of the bond fluctuates. What is yield? Yield is the earning from our investments over a particular period, including all the interim cash flows. The dividends earned from stock or the interests earned on debt instruments are considered for yield calculation. Yield is expressed as the percentage of the face value of the instrument or the current market value. It is a part of the total return which considers all the cash flows from the investment. Now, let us look at the concept of yield to maturity or YTM. It is an important concept in bond investing as it represents the total rate of return an investor can expect to earn if they hold a bond until it matures. Yield to maturity is the internal rate of return on a bond investment, assuming the investor holds the bond until maturity and reinvests all interest payments at the same rate. To calculate yield to maturity, consider the bond's current market price, par value, coupon interest rate, and term of maturity. It accounts for the time value of money and assumes that all coupon payments can be reinvested at the same rate as the bond. To get a better understanding of the yield to maturity formula and how it works, let's look at an example. Assume that there is a bond on the market priced at $850 and the bond comes with face value of $1,000. On this bond, yearly coupons are $150. The coupon rate for the bond is 15% and the bond will reach maturity in 7 years. The formula for determining approximate yield to maturity would look like YTM equals to C plus FV minus PV upon T by FV plus PV upon 2, where C is the interest or coupon payment, FV is the face value of the security, PV is the present value or price of the security, and T represents how many years it takes the security to reach maturity. In our example, YTM equals to 150 plus 1000 minus 850 upon 7 by 1000 plus 850 upon 2, which equals to 18.53%. Here the approximated yield to maturity on the bond is 18.53%. Yield to maturity is a useful metric for evaluating bond investments, allowing comparisons of expected returns across different bonds and maturities. While it aids in identifying potentially better investments, it's essential to consider other factors and recognize that expected returns are not guaranteed. Certain features like call and put options of a bond are not incorporated in the YTM formula calculation. A callable bond gives the bond issuer an option to call back the bond even before its maturity from the investor by paying up the entire purchase amount. A puttable bond gives the investor a right to demand the purchase amount to be paid to him by the bond issuer even before maturity. Both these options are not considered in the calculation of YTM. Another limitation is the risks for bond investment, like default risk, if payment of a coupon is not made on time, or reinvestment risk, if all coupons are not reinvested in the bond at the same coupon, are not captured in a YTM formula. The costs of buying or selling a bond, such as transaction costs, expense ratio, brokerage, etc., are also not taken into consideration. Primarily, yield to maturity helps to draw a comparison between the bonds or debt mutual funds on the basis of their expected returns. It also helps investors to understand how changes in the market conditions with the rise and fall of interest rates affect the debt portfolio as well. If you like the content, do like, comment, follow, and subscribe to our YouTube channel, Kautilya IBS Mumbai.